All right, good morning. Well, yesterday pre-market, we had potential or setups suggested a pullback or a sell, and there was like zero follow through to that. Amazingly, it gapped down a little bit and ripped all day higher, leaving it with a wide range bar. Now, that's always a concern after prices have been moving up for a while. I don't know if looking at the S&P futures here, three sideways days here, little consolidation in the topping tail. But this produced like one day of a minor little nothingness to the downside. And to turn that into a wide range VAR reversal higher, it's pretty amazing. You know, after it's been advancing like this. So wide range bars, let's just expand this a little bit. You know, these kind of wide range bars are normally after corrections. Those are starting to move. And while this one is nothing near the size of the ones at the bottom, moving up as this has and getting a wide range bar is suggestive of things getting overdone here. I'm not even aware of whatever news was driving the market yesterday, but I guess the prior week's reversal, negating the prior big red bar, certainly was bullish, and it did suggest a continuation move potentially up to the old high and possibly beyond it. So now we've got a quite important reference point to a line in the sand here being a wide range bar. And while it's not what we would define as a pivot or swing low yet, because there isn't enough bars to the right, a bar of this size is significant. And just looking at the hourly time frame, you can see the move off of the low. So one of the concepts from Master Trader Technical Strategies is that a wide range bar is a momentum move in a smaller time frame. And they move to the upside, that indicates strength and a continuation of the trend. The other side of that is it's the weakest link in the trend, meaning there's no support under here. And not that there needs to be to go higher, because of that kind of strength. That demand is suggestive that buyers are in full control, they're aggressive, and they're going to take the market higher. Now, the question is, can they actually do it? That's the unknown, and the right side, the hard right side of the chart that we all deal with. So, starting out today, we've got this little inside day at the top of the range. Nothing wrong with that. Actually, I said yesterday, if we did not have a day like this, that would be a concern, meaning what if today runs up and we get another wide range bar higher? Well, that is a clear indication that the market is getting overheated. And that may run right up in here. And historically, that's going to end the move. So a resting day today would actually be a good thing, because what that resting day does is begin to build an area of support within this void below. So if buyers don't continue to step up, it opens up the possibility and probability that prices fall all the way back down. Now, many use different reference points, whether it's a moving average, a Fibonacci retracement, a trend line, whatever it might be, to come up with some reference point below where buyers will show up. For the S&P futures, it could be a trader pivot line. So these are all subjective things. Now, what we need to see happen is, I can see this little pullback here, and this is a bottoming tail bar. I don't have it on the candles just to save space. But if this would now pivot, we would then have a new reference point to rely on to trade against as new support that wasn't there before. So as you can see, there's nothing here. And so whatever imaginary tools, lines that you put on here, they're really irrelevant. So this has to create support where there's none, and that would be bullish. And this is what an inside day does. That sideways choppy action creates support where there is none, and that is positive, and that could launch a continuation. And that's the essence of a 1, 2, 3 pattern. And so we're not going to get 3 until Monday, assuming that we went out like this. So that's how you interpret this kind of price action. You see a wide range bar just like this. Well, this one was after a pullback, so it's different than one that is happening after a little minor consolidation. This is more of a continuation pattern. So we'll see how it all plays out. Looking at the Qs, monster day up, right? So here we're just looking at this part of it, igniting bar, move up, never breaks a low, topping tails ignored, so when I spoke about possible sell setups as a counter trend trade yesterday, based on how we do things, it's got to break the prior bar's low to trigger. Never happened. Is the pivot around 28.35 of any significance? 28.35. There's nothing there, Fabio. So looking at this hourly chart, if you're looking at a different time frame, there could be a pivot there. So as we compress time frames or go to higher time frames, we compress data. Well, there's nothing there. If you mean this minor pivot, that is a subjective reference point, right? What's directly to the left is most relevant. Below that, here, well, again, it's beyond what's directly to the left, which is this, which ignited the move up. And if we talk about retracements, a retracement down to 28.35 would be getting on the edge of too deep. Remember, this kind of a move is power. So buyers, and this is why we say that the consolidation should stay in the upper half and ideally in the upper third of a wide range bar. That's creating the support where there is none. So a pullback to about that level, which I'm kind of just eyeballing as being, 65% or what have you, it's getting on the edge of a little bit too much, because with this kind of a power, why is it pulling back that far? With all of that being said, let's see where it pivots, right? Where we get 3 higher lows to the left and right. And this is potentially a pivot bar since it expanded the range to the downside and came back up again. If it ignores this buying that stepped up, well, that's going to be a little bearish, but let's see what, develops as the day goes on. It's still early. So the Qs, this situation, you can see it's getting close. It's getting close to the old highs here. And this kind of a wide range bar is suggestive of the end of a move. So wide range bars after corrective action ignites a move, and one after multiple bars running up, wide range bar, and that's a big one, right, is suggestive of the end of the move. Now, end of a move doesn't mean the end of the trend. It means that the momentum is unlikely to continue as this does. And that's why I said if we were to get another day where it accelerated higher, that would be a very strong indication that this move that started post-Christmas is over. So we'll see how this sets up. We look at historical patterns of what happened in the past, and that's what we use as technical traders to say this is what should happen in the future. So we shall see what today brings. But right now, this kind of a bar is saying that look for a consolidation day today. And we'll see if it continues higher or just chops around. Right now, my expectation would be that today would be a building day, consolidating, and then whether that launches the next move higher or whether this is the high point and it goes down, we'll see. We'll see. I mean, that's what we do, right? We process information, and depending on the type of trader we are, meaning are we day traders? Well, we process information on small time frames, and that's a choice. Is it a 5 minute? Is it a 15 minute? Is it 1 minute? As swing traders, we process information on weekly and daily time frames. And, so it goes depending on, your style of trade and what your focus is. Now, we always look at different markets to see if there's a correlation or the lack thereof. And the Dow here is lagging, even though it had a good day yesterday. And of course, Boeing is having an effect on that. And I believe it's lower again this morning, where orders are being pulled, and a lot of negative talk. And probably at some point, that'll become a buy, because these kind of very negative things, when these kind of stocks typically set up buying opportunities when the stock gets pounded down enough. LaDon, you're on probation because you're so aggressive as a trader, so we're banning you from the text alerts on Telegram. If you don't have it, we'll get it to you. I'm joking, of course. So we'll see what the Dow does here, but there's a little bit of a negative divergence between the moves in these different markets, and they can diverge at times. And, so we take in this information and process it, and do we have, everything moving in lockstep, which is just a perfect environment, or do we have concerns, such as the transports, which we talked about yesterday? And I said, look, is this going to create a W bottom? Is it going to break lower? This will be something to keep an eye on. And the transports had a great day yesterday, at this level of support. Now they're in a gap fill against a big red bar, and they've broken lower. So is this a rebuilding process, or was this just, a good day based on a good day in the market? So we'll see how this continues. And the Russell also had a good day, and the same analysis there. You can see the weekly chart. Is it going to make a lower high, chop around here? So differences between moves in the market to, not get so bullish on this market that everything is perfect. It's good. It's not perfect. It doesn't always have to be perfect. But when you see things that aren't lined up, be objective about it and say, you know what, this isn't perfect. No. Qs, ETF, big wide range bar, same analysis, but you don't have the 24-hour time frame, but the picture is essentially the same, where prices are accelerating to the upside. And that is what happens near the end of the move. It accelerates, and then we wait to see when the acceleration peters out. And we'll see what today does. Looking at the spiders, consolidation, wide range bar, same kind of story, but, I always talked about this reversal, a continuation pattern after a run like this. The risk is rising as far as longs, but we'll see. And bonds, monster day to the upside yesterday. We talked about this shakeout type of pattern, and it continued higher. And this is another intermediate to long-term concern, that bonds are rallying here, and they certainly look like they can go higher. You got the old high up here. And so what yield's now going lower, we've got to keep an eye on these yield curves, which the shortest is now inverted. We showed this over the last few weeks, saying that it was getting there. And, this is the 3-year versus the 3-month versus the 10-year. It's close to inversion, and the 3 versus the 30-year is moving lower. It's got about half a basis point before it gets there. So there's some clouds over the market here that are gathering. And so that doesn't mean anything's going to happen today, but we need to keep an eye on what's going on. In addition, we've got the wrong way option traders, which have been blessed as of late in this market, upping their calls again, almost to the 0.80, the moving average. And yesterday, the close above 0.80, typically, is going to produce at least a resting day, if not some kind of corrective action to take the wind out of their sails when they get too aggressive on the long side. Yes. KJ, if you would, just email me, Greg at Master Trader, and I will have that checked for you. And oil just looking very good. It's coming up to its 200-day MA. And so a 200-day moving average on a daily chart is a reference point that most technical traders will be looking at. However, the thing to understand and recognize is that even a moving average is subjective, even though a widely followed one. And you can see there's nothing there. There's no price resistance to trade against. So while subjective and we use moving averages, we know that they're subjective, and what we ideally want to see with a moving average at a certain level is that there's something actually there. For example, at this point, the moving average was aligned with that swing. So the same kind of thing, if we had a moving average here and it was in alignment with that, we'd give it more respect than, we might at this point. Now, the 200-day, as I said, is so widely followed, we have to respect it to some extent, but recognizing there's nothing of significance to the left, it would suggest that it could get through it. And I'm almost done here, and I hand it over to Dan. And thanks, Dan. And there's anything else I want to cover here. Energy just looks really good. It looks like maybe one of the best places to be right now, where it can continue to move higher after this shakeout. And financials, which did look like they were going higher a few days ago, fell all the way back down to the support. So trading range at best, maybe breaking lower with interest rates falling as they are. So in the yield curve narrowing, it may not be the place to be as it thought like it could have been. So stocks like Goldman, which looked like they were going higher, they don't. And the rest of the sector is just different variations of this pattern where they looked like they were breaking out and going higher. And, if you have any doubt whether you should have a hard stop in place, here's an example of it, because you just never know. As good as this looked, it fell back to earth, and you could be in a situation where this reversal bar fails and it drops. And, you got to have the discipline if you're going to do this to say, you never really know. And that's a good example of it. So that's it for me. Dan, it's all yours.
Yeah. All right, thanks. Good morning. So remembering to the close yesterday, I said with that powerful run up that yesterday was not a day, to start adding new longs into the close, particularly with the overbought internals. We did add a few in the morning at great prices. Let's go through everything like always. Urban, we have a call spread. CGC put spread, it's against us, but still holding, no adjustments. MJ is the cannabis ETF, it's looking better than the others. PYX, we also have a put spread for April. WMB, we're long stock. And it's had a nice run here. I'll be looking to leg into a covered call. Same with AMD, we got into yesterday, a little gap down here. So yeah, I think 5-minute low. Let's sell a call spread and leg into a covered call. A couple here, just out of order. TERP, I'm looking for a pullback. Stamp is weak. Weight Watchers weak. DHR is bullish. Tilray, we have a covered put, which is short stock, short put. BSX, we have as a bearish 1, 2, 3 under yesterday's low, so it hasn't triggered yet. EPD, not chasing it, but that was strength. MRO is a bullish 1, 2, 3. over Wednesday's high. That's a go. If it triggers, it looks great. Schwab, we're short stock. We've covered a third at 44 bucks. FTV looks great. If this can hold, particularly if it can hold with the market gap down, we might nibble on that today. It looks great. DRI, we have a put spread. Echo Alpha, one of you mentioned it yesterday. Nice wide range bar at a consolidation. That would have been a no-brainer put spread. Like we said, banks are weak. This STI, what a beautiful bear flag pattern there. That target gap fill. And I didn't see it until late on the FOMC day. But KRE was weak also, a little bear flag. XSD we got into yesterday in our ETF trader. PayC, we bought this one. We're long stock. That looks fantastic. Netflix, we have a condor, so we have this disaster on our hands for those who didn't take a stop. But I'll keep an eye on that for them today. Boeing put spread. I said it was on probation, and now we're getting another gap down here. I heard Kramer saying there was a really bearish article in the New York Times. I don't read that newspaper. But, you know, we're either going to stop out, leg into a condor, but I'm not giving this much room. You've heard me say if this fails, it can fall another 50 bucks. GME, I have as a short under yesterday's low. BDSI, it's a bullish 1, 2, 3, even though yesterday's inside tail was large. Data, trader brought this one up. It had this small little 2-bar consolidation, but something that's run from the low to the high. I would prefer it to have rested more, but it's strong. You can't argue with it. Coup looks great for 1, 2, 3. Did we get into that one? No, I didn't give it, but that looks fantastic. Particularly if we can get a 1, 2, 3, meaning an inside day today, Monday, that will be a no-brainer. Yeah, I agree, Christopher. I agree. That's what I've been saying. That's why I'm not sticking around. We're short this one, BXS. Do not go into hope mode on Boeing. And I think I got them all. Did I leave any out? Let's look at some gappers. This thing's a volatile mess. 24 bucks. I'm not messing with that thing. Tiffany and Nike had earnings here. 96 bucks. The low here. Wow, 96.40. Wow, it's gapping. So look, so here's pre-market, of course. So it gapped under it, and now it's right there. That's a very bearish gap. I'm gonna put that in the window. Yeah, I'll just put them right here. We got Tiff and Nike. I still have bib here from yesterday. Nike gapping down also, 85 bucks. Wow, that's bearish gap too. Both of those are ugly. Bib down 2 bucks. I said that might be a day trade. I'm short. FTV, all right, these are kind of leftovers. Facebook, no pattern. Wage, I've been watching for a couple days, but nothing to do right now. Tesla, still in a downtrend, nothing to do. Apple's been a beast. Microsoft's been a beast. Intel. Google. Wow, look at that run on Amazon. Amazing. So at least, you know, I got us into a put spread here, right on the beautiful day, right there, right on that breakout day from this 2-bar consolidation. Yeah, Christopher, I said definitely, yes. That's why I said on our put spread, I said the last 2 days, or yesterday in particular, he's on probation. Let's look at the hourly. So look, no, that looks horrible. Look, we had support, support, tail, kind of a downside shakeout, support, 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 support. Now we're gapping under it. No, this doesn't look good at all. Like 30-minute low. No, I didn't, Robert, but I will. I think 30-minute low, this could be a directional short. Looks horrible. So we got our stop posted. Noble, no, I didn't mention, but yeah, I like the oil sector. All right, perfect timing, 9:29, and I'm done. Do you all have anything you want to look at? Spiders look, in terms of a new trade, if we were to go long, if we get a 1, 2, 3 today on spiders, then that looks like a long on Monday. It's 3 steps. We need the inside day, upper third. We need to get through the weekend, news. And then on Monday, like trade above the highs. Like right now, in terms of retracement, just look at that print. It looks like 40%. It better hold right here for that scenario. All right, Schwab, 5-minute high, and I'll be